What's up, everybody? Eric here, Mr. Fired Up Wealth, bringing a new video today for you. Here's what I'm going to do today. I think it's going to be something fun. I think you guys are going to enjoy this one a lot. Definitely subscribe to the channel if you haven't subscribed, because we are just getting started here at Fired Up Wealth. So what we're going to do today is I'm going to actually create for you a portfolio. If I had $10,000 and I was just getting started in investing, maybe it's even less than that, but I'm going to use 10,000 as an example. Say I had a $10,000 portfolio. What would I buy right now? What stocks would I buy that I think are best of breed, that I think are going to perform the best over a 5 or 10 year holding? So this is a long-term investing portfolio, and I'm going to build it from the ground up and show you exactly how I would put $10,000 to work in the stock market. Without further ado, let's get started. Okay, guys, we're going to do something fun today. We're going to just make a little mock portfolio. Now, if you've got a larger account or if you've got a smaller account, you can make adjustments, but these are still going to be really good stock picks. I'm basically giving you some of my favorite picks that I think are basically have the best room for growth over the next 5 to 10 years, that maybe I feel most conviction in. So it might not necessarily mean they're the safest stocks in the world, but in my mind, they are, if that makes sense. So you might not agree with all of them, but there's a lot of stock picks on here that are very good. You're probably going to agree with most of them. And there are going to be some variances depending on what you're really into. And I'm going to give you some options as well. And stay tuned. At the very, very end, I'm going to put it all together and give you my actual picks, my portfolio. But it's important to watch as we go along, because there's a lot of information and picks as we go. So first of all, this is how to build a growth portfolio, balance effective stock market growth. This is something I've done before. This is an update, April 2021. So assumptions, real fast. It's best for younger investors or folks that have some time before they need the money. It assumes a balanced approach. Try to be aggressive, but also balanced. So aggressive growth, but not the most aggressive growth you possibly could have. So this is about an 8 out of 10 on a scale of 1 to 10, in my opinion. It definitely has risk reward. It's got a lot of opportunity for growth to grow your money. It assumes a $10,000 portfolio, but you can tweak that, like I said earlier, for a larger or for a smaller account. If I were starting today and I had $10,000, this is what I would build to hold for at least 5 years. Obviously, if the story changes on a stock, you sell, but you have intentions of holding it long term and letting your money grow for you over time. So the first thing we're going to do is we're going to identify what I call buckets or pillars. We're going to identify buckets where we're going to put our money into these buckets. The first thing is going to be ETFs. Now, if you don't like ETFs, you certainly don't have to do ETFs, but I think it's a good way to basically build a core within a portfolio and build stocks around it. Please hear me out. And if you don't like ETFs, feel free to replace them. But I think it actually gives you a lot of stability. It gives you a nice core. You never have to worry really about selling it. So if you're holding it for 10, 20 years, you don't necessarily have to worry about something going bad and selling it, because a lot of the ETFs, like the ARK ETF, for example, is actively managed ETF, and they're doing some of that heavy lifting for you, okay? So 30% ETFs, stay tuned for my picks, and I'm going to break everything down for you in percentages, make it real easy. And if you haven't subscribed to the channel, please do. This is the type of stuff we do all the time. And what I'm breaking down is basically a replica of my own portfolio. I have a portfolio that's similar to this breakdown with about $1.5 million in it. It's a taxable brokerage. I've got lots of other videos on the channel that show you my actual portfolio and how I actually do it in my account. But this is just a mock portfolio with a smaller dollar amount. So we're making some tweaks. You'll notice that the ETF number is slightly higher, because if I'm young, I want to build that core a little bit. And I'm going to do lower DGIF. This is normally 20%, sometimes even higher, depending on your age. As you get older, these percentages generally change. So you're going to have more dividend and more income stocks as you get older. When you're younger, you don't need as much. So we're doing 15%. You can adjust this as needed. Based on 15%, you'd have 5 individual stocks, around 3% per holding, and I'll show you some picks. I'll give you my picks as well as some other examples, and you can kind of make your own decision. 40% growth, so that would be about 10 individual stocks, about 4% per holding. Stay tuned for my picks. I'm going to give you the actual picks and try to take basically the secular growth trends that are out there, what I think are going to be massive growth cycles over the next decade. And I'm going to try to pick the best of breed, in my opinion, from each of those secular growth trends. So you're going to want to see those picks. 10% spec. So spec would be a lot of your SPAC type stocks where you don't have a lot of data, you don't have a lot of fundamentals, It's more of a story, a gut feel, what you would call, a qualitative approach when you're doing your analysis, your due diligence. So on the spec bucket, we'll do about 5 to 10 stocks, maybe 1 to 2% per holding. I'll show you how I'm going to do it here in a minute, as well as some stock picks. Cash, I always like to have 5% cash, liquid. You use that for dips, for opportunities. If there's a bad earnings or if the market pulls back, you want to have some cash. There's nothing worse than having no cash when your favorite stocks are on sale. So try to always have some cash. If you have to shave profits to keep cash allocation. I always like to have at least 5% cash, and it's worked really well for me I've been investing 20 years. I grew an account starting with $50 a month. I've grown it into $1.5 million. I didn't do it, day trading penny stocks or anything like that. I did it through long-term investing in quality companies and growth stocks, and basically having my money grow over time. But I certainly, come from humble beginnings, and anybody can do what I'm doing. And I've used this exact approach that I'm showing you here to really build my wealth over time. So this is an example. I've used this before. It's hand drawn. My writing's a little bit messy there, but you can see here 25% ETF. I said 20% earlier. That number really can change depending on the person. A lot of times we use 25% as the 8 out of 10. So 25% and 20%, and we basically switched that. So we took 5% from the DGIF bucket in this example we're doing today. And so the ETF bucket's 30%, DGIF is 15, growth is still going to be 40, spec's going to be 10, cash is still 5. So hopefully you're with me. So ETFs, let's pick 6 ETFs. We'll make this real simple. We're going to go QQQ, that's the NASDAQ 100. We're going to go WCLD, that's the Wisdom Tree Cloud Computing ETF. If you don't know about this one, I've got videos on the channel. Definitely subscribe to the channel and check out some other videos. You'll like the one on WCLD. Essentially, that's equal weight, and it's dealing with the cloud SaaS type names, those kind of mid-cap type stocks that have lots of room to grow. So when you think of, a Datadog or a Zoom or things like that, those are the kind of stocks that are in WCLD. If you're not familiar, it's a Wisdom Tree ETF. Next, I want to do semiconductors. They are the new oil. I've been saying that since last, August of 2020, that semiconductors are the new oil. We've made a lot of money in the Fired Up Wealth community off of these semiconductors. And I've got a lot of individual names I own, but a really good way to play it is through the ETFs. Some people prefer SMH, some prefer SOXX. It doesn't really matter. You can take a look. I've got a video on the channel that breaks those down for you. Take a look and decide which one you like best. I personally have SOX, but I've had it for a long, long time. If I were making a decision today, I would have to look. And in fact, in the last couple of weeks, I looked, last week I looked, and if I recall, the holdings were completely different than what I remembered, from January. So those do change quite often. Both of them perform really well, and both of them have great holdings. You got to pick the one that you like best. Next would be ARK with the K, ARKK. Now, ARKK tries to basically take all the best of breed from like ARKG, from ARKQ, from ARKF, and kind of has it in the ARKK. So that's why I say ARKK. Some people like to have multiple ARKs, which you can do that as well. But I think ARK, if you have a decent percentage of ARK, it gives you, kind of that best of breed approach. My favorite ARK actually is ARKW, the new internet one. But because we have WCLD, we're going to balance it out with the ARKK, okay? Next is MSOS. Now this is, legalized marijuana play. Really good ETF. It really focuses on the U.S. type corporations and the ones that are, basically they're vertically integrated, that are trying to, grow within the U.S. as legalization rolls out. So a lot of really good names in there, and it's a great way to play that space if you're not familiar with that space. I've been investing in that space since 2017. I've made a lot of money in that space. We've got some real pros in our Discord community that really study this and do due diligence. And if that's interesting to you, definitely join us there on Discord. PBW did a video on this one as well. That's the Clean Energy ETF. So we've got 6 ETFs. That gives you a really good balance of a lot of technology. There is some overlap, but it's really not that bad, because if you think of QQQ, it's a NASDAQ 100, so you're going to have your Apples, your Amazons, your Googles, Netflix, even have some Tesla in there. WCLD is going to be more of the mid cap that's not going to be in that NASDAQ 100. The SOX is going to have some overlap, like NVIDIA is going to be in QQQ, but also in the semiconductor ETFs, but has lots of other things in there like Lam Research and, other ones that might not be in these other ETFs. ARKK is going to give you Tesla, Coinbase. There's lots of different variety. Even UiPath is now in ARKK. So I like the diversity in that one. MOSS is very diverse and has a lot of great stocks in there. And PBW, what I like about that one, it just has everything from, it has EVs, it has energy stocks, solar, wind. It's got kind of the whole gamut within that clean energy space, and it's a great way to play it. So 6 ETFs, that's $3,000. We're doing $500 in each ETF, makes it really simple. So 6 ETFs times 5%, which is $500, equals 30% of your portfolio. Boom, you've got $3,000 allocated. Now what are you going to do with the other $7,000? So next, DGIF. So dividend growth investing for FIRED is what I call it. It just means total growth. It means that the dividend's growing as well as the share price is going to appreciate as well. You don't want a stale income stock like an AT&T if you're young. That's just going to give you mostly dividends and not really give you much in the share appreciation. You want total growth. So I'm going to give you a couple stocks from each of these. I think it's good to diversify. So we're going to do 5 stock picks, 5 categories. These are kind of the 5 main categories, right? So financials. Of course, I like Square and PayPal. We're going to get to that in the growth section that we're going to do next. But this has to pay a dividend. So these have to pay a dividend, and it's got to have, there's 5 criteria. If you're interested in what those 5 criteria are, there's an entire series on dividend growth investing for FIRED on the YouTube channel. Subscribe to the channel. Check out that playlist. But financials, so MasterCard and Visa are really good because they pay a nice dividend. They've got lots of room, in my opinion, left for growth. If I were to pick one of the 2 right now, I'd probably pick MasterCard, but I do like both, and I do actually own both of these stocks. And I want to reiterate again, I do own Square, I do own PayPal, I own IPOE, so I like those stocks, but it has to fit this parameter, which pays that dividend. You're going to reinvest those dividends, you're going to drip, and kind of let that interest compound, and it's going to help you as a young investor grow over time and give you a little bit of stability with those blue chips. So MasterCard would be my pick out of those. You could pick either. For healthcare, my pick would be United Healthcare. I also like AbbVie. Now, I do want to note that AbbVie will kind of be a tweener type pick because it really has a higher dividend payout ratio than I like for DGIF. It's slightly over that 50% mark, but I do like it. It still pays over a 4% dividend yield. It is a little expensive here. If I were to pick one of these 2, it would personally be United Healthcare. But with that said, AbbVie is one of my top holdings, and I do own a lot of that. I bought it at 65, and I've got a great yield on cost. Technology, my favorite basket, and you really could, go overweight on this if you wanted to and just pick from this basket. NVIDIA is probably going to be my top pick, and I do own a lot of NVIDIA, but I also like Apple and Microsoft, and I own all 3 of these stocks, and I have a pretty big position in all 3 of those. Feel free to pick the ones that you like. NVIDIA would probably be my pick of those 3 right now for a long-term hold. They've got the most, I think, upside growth potential in my opinion. For consumer, it's really tough. I like Nike. It's got some risk right now with China. It's not the least expensive stock you're going to find, but I also like Wingstop. I also like Tractor Supply Company. You can pick from that group. Nike would probably be my favorite. It just seems like the safest. It probably isn't going to give you a ton of growth, but it's a nice stock to own. I think everybody likes to own a piece of Nike. It's a good company, right? So Nike would be my pick out of that group, but check out Wingstop and Tractor Supply Company. Those are newer Fired Up Wealth portfolio ads over the last 6 months or so. And both, I think, have lots of upside potential and do pay a nice little dividend. Industrials, I would go with Lockheed Martin here. They are in the ARK-X, the space exploration ETF. They've got a lot going for them. It's not that expensive. It's a decent PE. It pays a nice dividend. I also like Honeywell. It's run a lot. I also like stocks like John Deere. But if I were to pick from industrials, it would probably be Lockheed Martin. My second favorite right now would probably be Honeywell. So my 5 on here would be MasterCard, United Healthcare, NVIDIA, Nike, and Lockheed Martin. That's the 5 I'd pick. And the way it would look is this. So you have $1,500 in this basket, so 15% of your $10,000. You pick 5 stocks, you put 3% of your portfolio in each of these stocks. That's $300 per stock. So 5 stocks times $300 equals $1,500 or 15% of your portfolio. Up next, I know a lot of you probably are just waiting for this part, growth, because that's probably what you're fixated on. And it's okay if you want to tweak your portfolio to make it more growth, but I do encourage you to have some ETFs and some dividends in your portfolio. If I were to go back in time, the reason I'm doing YouTube and created this channel is if I were to go back in time and tell my 20-year-old self, here's what I've learned over 20 years of investing, I would tell myself to do what I'm literally saying in this video. It doesn't mean you have to listen to it perfectly or follow it perfectly. I'm not a financial advisor. I can't even tell you what to do. I'm just giving you some ideas and opinions. So really take this for what it's worth. Take it for the value you get out of it and kind of make your own path. And you can tweak these, the percentages the way you want, even the stock picks the way you want. So let's get into it. What I did here is I took really the top secular growth trends that we're excited about over the next, 5-10 years, over the next decade. So when you think of things like EV, think of things, like cybersecurity, we're going to go through each of those and I'm going to give you my favorite stock from each of those secular growth trends. And I think this is going to be kind of fun. So the first, EV. Now, I do like a couple different names in this space, but if I were to pick one, it would be Tesla. So Tesla would be my pick here. I know a lot of people like NIO as well, and there's lots of other stocks in this basket. If I were to pick one, yes, it's expensive. Yes, it doesn't really make sense from a valuation perspective. I do think that Tesla will grow into itself over a period of time, and I think that you can still make quite a bit of money in the stock. I'm not saying you should go run out and buy it at $700 necessarily, but the recent pullback, if it came back to $550, something like that, that's where I'm adding. So all these stocks, I'm not necessarily saying I would go all in. When I buy, I dollar cost average. So if I was going to buy a portfolio or invest in a portfolio today, these are the stocks that I would focus on, but I wouldn't just go out Monday or the next day after watching this video and just put all your money in there at once. So I want you to hear that. I would dollar cost average. I would use technicals to try to figure out better entry and exit points. And that's really what we do in Fired Up Wealth in the Discord community. So check out Patreon and join us there because you'll learn a lot from things like masterclass series that we've got. We've got chart days every Wednesday where we record and talk through technicals. You can actually come online and say, hey, Eric, take a look at Tesla's chart. Where do you think I should buy it at? And I'll give you my opinion and actually do it live on a live stream. So check that out. Dollar cost averaging is key here. I want you to make sure you do that and not just go all in, the next day. The next is cashless. So you think of cashless, you're thinking of, Squares and PayPals and things like that. And there's really a lot of stocks that kind of fit in this basket as well. My favorite though would be Square, especially with the addition to doing more cryptocurrency. I think there's a lot of opportunity even as the economy reopens from COVID. I think Square is a beneficiary because you think of Square, a lot of small businesses own them, bars and restaurants, or not own them, but use them. Bars and restaurants use them, things like that. So Square actually, in my opinion, it's benefited from, the whole pandemic, but I also think there's another story on the other side of that where they benefit from the reopen trade as well. So I like this stock. I like PayPal as well. I own both of those, but Square would be my pick of cashless. Cybersecurity, you already know what the pick is. Endpoint security, it's CrowdStrike. This is one I'm very bullish on and been buying it, for a while. Bought it under 100, bought some more, at 125. And in the Discord community, we've done a good job. A lot of people are very bullish in the Fired Up Wealth community on CrowdStrike. And there's other names I love in here that I own too. I've got, things like, Adka and Zscaler and Cloudflare, even like Fastly. There's, Datadog. There's tons of these cloud SaaS type names. But for cybersecurity, you think cybersecurity, best of breed, endpoint security. For me, it's CrowdStrike. Next, legalized bets. So DraftKings, that's one that we bought in Discord as well, under 35, I believe was the price. And, it's made a nice run. I think it continues to do well. As more and more states start to legalize and roll this out, you're going to see a lot of upside opportunity, especially as all the sports kind of come back into full force here in 2021, 2022 and beyond. Gaming, so now we're talking about video gaming. I love Take-Two. I even like Activision. There's Corsair. There's a ton of different plays. My favorite pick, though, would be Unity. I like a couple of different segments of their business. I've got a video on Unity that breaks it down. Definitely check out Unity. I like it for AR and VR as well. I think that stock will be worth a lot more in 5 or 10 years. It's expensive, even after it's made a pullback, from 170 to I think it's trading a little over $100 right now. It's still expensive, but it's come back a lot, and I do like it as a long-term hold. Telehealth, you know what it is, Teladoc, there's Amwell, Amazon's a threat here, but I still think Teladoc is the best of breed play, and it'll continue to do well. E-commerce, if you follow me at all, you know that Amazon is my number one holding. So Amazon would be my favorite e-commerce pick. But if I were young and I'm starting a portfolio and want to maximize my growth, I'd probably go with Etsy. And I also like Pinterest, but Etsy would be my pick. Real estate, I'm going to go with Zillow Group. You already know that. I also like Opendoor as a spec play, but we're going to go with Zillow Group in our real estate bucket, best of breed. There's other ones like Redfin. I think Zillow Group is best of breed, ticker ZG or Z. And the only difference between that is the shares, A shares and C shares. I prefer the ZG, but I think a lot of people just buy the regular flat out Z. So either one. Now, here's where you're going to need to make a choice. So the next three that we're going to talk about, I'm going to give you 11 picks. We need to pick 10. So this slide's really easy because you're only getting 11 choices and you're going to pick 10. Of course, you can tweak it however you want. You don't have to buy any of these, but it's kind of a fun game to play. So now digital ads, I've owned this stock for a long time. I'm up a couple 100%, 200-300% on this. Trade Desk, there's other ones you can play in this space too. I do think this stock continues to do well. You can pick between that one, crypto. I know some of you don't like this stock, that you don't believe in cryptocurrency, but Coinbase, you choose which one of those two are better for you. And there's a third one you can choose from, and this is hydroponics. You think of grow generation, and you think of that legalized marijuana trade. It's a pick and shovel type play, just like the Coinbase play is a pick and shovel type play. You can really pick, 10 of these 11 and make a decision on that. Okay, also guys, I'm editing this in because I know if I don't, I'm gonna get crucified. Snowflake, I'm very, very bullish on, okay? And I could have added another one. I could have added a 12th one and included Snowflake, and that would have been, under big data basically. So I like Snowflake, and that would be one that I absolutely would consider adding as well. And if you don't want to do, say, 10 picks, we're doing 10 picks here, you could do 12, and you could just basically do the math. So this is really just an exercise to show you how to kind of build that $10,000 type portfolio, and you can tweak it however you want. But I want to make sure you hear me say that I am bullish on Snowflake. I think it's a good price if you can get it around $200 a share as a long-term hold, and that's one that you absolutely should consider in your growth basket as well. And that would give you $4,000. So what you're going to do is you're going to take $400 in each. You're going to pick 10 stocks, put $400 in each of your 10 picks. That's 4%, and it's going to give you 40% of your total portfolio, or $4,000. And I actually love this bucket. I love all the stocks in here, and hopefully you agree with me on most of these. Of course, you're not going to agree with all of them, but I like everything on this list. So next we have speculative. Now this one, stay with me here, because it can be a little confusing how I'm going to break this down. So I'm going to give you a list of stocks, and I'm going to explain it. So Virgin Galactic, Beyond Meat, Planet 13, Green Thumb Industries, Trulieve, Canopy Growth, Twist Biosciences, MindMed, ACTC, we got C-Link B, and the Upstart, and we got MP. So here's the stocks that, and there's a ton of these. This is just a list I kind of grabbed. The last four are picks that people really like in the Fired Up Wealth community. I don't own those, but they've done, like Upstart's done really well. Miguel picked that one, it's done really well. The C-Link B was one from one of our one of our German members in the community. Picked that as his top pick of the year, and it's done well. MP for materials play. You got ACTC when you think of electric vehicles, electric buses, things like that. So if you're not familiar with any of these stocks, you can look them up quick. Twist Biosciences is part of ARCG. The rest of these are legalized cannabis plays. Then you got Beyond Meat. Everybody knows what that is. And then Virgin Galactic. So what are we doing with this group? $1,000, because we're trying to, not have a huge amount of spec in our portfolio. You can adjust this how you want. I personally would never go over 20%. That's just my opinion. At the end of the day, it's your money and you need to decide what's best for you. I'm just giving you some ideas. So you get to pick. And example, you could pick 10 stocks and put $100 in each stock. I'd probably do 5 stocks at $200 or something like that. I actually picked 6 stocks, and at the end here, I'm going to show you a pie chart of what I picked and go through. And I'm going to go through all the picks that I went through on this video. And there's going to be a total of 27 stock picks from all this effort, and I'm going to give it to you all at once here. So stay tuned. The last thing I want to cover is cash. Always have 5% cash. Why do you want cash? You want it for any, bargains, anything, one of your favorite stocks goes on sale, market pulls back, et cetera. We talked about in the beginning, try to have that 5% cash. In this case, it's about $500 your portfolio. Try to have that just sitting there, just chilling, just waiting for opportunity. And you can even, be active with some of that. You might want to, buy a couple stocks and you do a swing and you sell it and you get, you make $100. Now you got $600. You can do that however you want. It's your money. But that's what I did when I was younger is I would often have 5 or 10% cash and I would swing, not with all of it, but a percentage of it. I might take a couple $100 and swing, a couple shares of stock or something and try to make some profit that way. So next, what I'm going to do is I'm going to actually break down the entire 27 picks. So stay tuned. Okay. So this is actually Barcelona Field Studies Center. It's this free pie chart creator. If you want to check it out, it's just, you can find it online. Geographyfieldwork.com. But I thought this was kind of a cool tool and I used it. So here's what we got here. So I'm going to zoom in. There's 27 stocks or holdings, assets. We've got QQQ, WCLD, SOX, ARKK, MSOS, PBW. So $500 in each of those, you can see on the right here. You've got MasterCard, United Healthcare, NVIDIA, Nike, and Lockheed Martin. Those are your 5 DGIF at $300, per stock. And of course, you can add more stocks. You can change the numbers, do whatever you want. That's just an example. So growth, we start with Square, CrowdStrike, Zillow Group, Tesla, DraftKings, Teladoc, Etsy, Unity, GrowGeneration, and Coin. So I actually left out Trade Desk. The only reason I left out Trade Desk, I like Trade Desk, but if I were to pick 10, that one, for me, it's hard because I already own it and I'm up a couple 100%. So it's hard to say I want to buy it right here. So I think a lot of it's just mental. Like, I don't know if I would pay what Trade Desk is selling for right now. So that's why I kind of eliminated it. But just so you know, I still own a lot of Trade Desk. I'm bullish on it. I'm holding it long. I'm not selling it. So again, this is just for fun. It's an example. It doesn't mean necessarily anything that I eliminated that stock. So each of those is $400 in your growth. And then on spec, what I did is I did Planet 13, I did Green Thumb, Twist Biosciences, and Upstart. And I did those 4 stocks at $200 each. And then what I did is instead of just picking 5 at 200, I went with an extra stock and I just did $100 in each. So I did the CLNKB and the MP at $100 each. And next I'll show you a pie chart of what this looks like. All right, guys, so here's the pie chart, and it's, for whatever reason, it's bringing up these decimals, and it's not that big of a deal. Just basically ignore those. So you've got, 5%. Each of your ETFs is going to be 5%. You got 6 of them, that's 30%. You get the math, right? You got 4% in each of your growth, okay? Each of your growth picks is 4%. You got 3% in each of your DGIF picks. And then you've got 2% in some of these specs, and then there's 1% in the CLNK and the MP. So this just gives you a nice visual, though, of what it looks like. It's, 5%, 4%, 3%, 2%. So you have 27 holdings representing $10,000. And you could certainly say, hey, that doesn't make any sense. That's way too many holdings for a $10,000 portfolio. And that I could probably agree with that. Generally, when I do portfolios like this, they're much larger. Like mine's $1.5 million. But with that said, I don't think there's anything wrong with this portfolio, and I would do something similar to it. So maybe you don't have 27, maybe you have 12, whatever you're comfortable with. But it's if you break this down and you really look at what's in the ETFs and what you have, and you look at all the secular growth trends, all the exciting, explosive growth opportunities over the next decade, this is actually covering you really well, and it's as safe as it can be while being risky, if that makes sense. If one of these stocks fails, it's not going to completely bury you. It's a small percentage. And I think the basket overall is still going to outperform greatly. The NASDAQ probably, the S&P 500 for sure. I think it's going to outperform all the major indexes if you have a wheel like this. So let's give it a try. Let's see how it does. And maybe in 5 years, we'll make a video. We'll come back and take a look at it. But I hope you enjoyed this video. If you haven't subscribed, please do. Have a great rest of your day. Take care.